Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody guys. Today again we'll take a look at the Australian dollar. So on the euro currency, as you can see, market still stands on retracement up after the significant drop as a result of the Fed meeting, and right now it's approaching to fib level. So I just will briefly show you the euro currency. So you can see here's market reaching the 618 resistance of this drop. So this action could be maybe some anticipation of positive results of the German elections this weekend or something of that sort. So because this is not really some very thrusting action, so we don't see a fast acceleration, but it's rather stubborn. And after this drop, this is really significant retracement, especially when we have talked about the head and shoulders pattern. So meantime, it's also pattern could be formed. So for example, here we could get also the butterfly pattern, as you can see, is 127, approximately the same 1775. So it will depends on how situation will develop here. But for this purpose, to make this pattern valid, market should stay below this top. So in this case, the butterfly will be valid. So as you can see on the euro currency, mostly picture the same that we had previously. And right now, it makes sense to take a look at the Australian dollar because yesterday it have got double impact. First, it was from the tensions around the North Korea, so you know the spiking in United Nations speeches, it's Donald Trump, and then Kim Jong Un said that intends to make the explosion of the hydrogen bomb. It's very significant power, and that really has bring the new spiral of the tensions around North Korea. That's the first moment, because Australia stands rather close to the Asia-Pacific region, and it feels stronger any tensions on the Korean Peninsula compared to European countries. It stands rather far from them. So that's was the first event. Second, you know that the S&P has downgraded the China sovereign rating. So as it's the major partner for Australia, it also makes an impact on the whole region, in Australia in particular. So you can see the result, Australian dollar has dropped here. And if you remember in our weekly research, we have talked about the fundamental perspective of the Australian dollar. We have come to the conclusion that actually Australian dollar has very limited sources for growth, because Australian central bank doesn't suggest right now the increasing of the rate. And so it's a bit limited potential for significant growth on the Australian dollar. Maybe some inner factors, as the import prices growth, as you know that sorry, not import, export prices, because it's commodities prices. So maybe trading balance only from that statistics, Australian dollar could get some support. And upside target stands approximately is 81.65. But currently, it's a major question how market will establish the upward action. We will talk only in a short-term perspective. In today's session, what could happen. The concept of this drop, yesterday the market has reached support area. So this is daily 79.30 fib support around the monthly pivot point, and it's very close to the daily result. So market right now stands here. At the same time, the pace of this collapse is very fast. It's very difficult to suggest that market immediately will turn up and start an upward action. It's more probable that market should fade a bit, the strength of this dropping, maybe by another leg here before some reversal will happen or something of that sort. That's why, if we'll take a look at the 4-hour time frame chart, we see that market has completed actually ABCD pattern down, but you can see that the CD leg is very fast. It means that after maybe some minor retracement, it's very big chance that some another leg down could happen. At the same time, guys, you can see market has formed here intraday Gardner's 222 buy pattern. right? So this is potentially bullish pattern. It doesn't mean that market should continue move directly above these tops, but catalyst T+2 buy could just trigger some bounce here. That's very probable. Because the nature of this drop was not really in some events in Australia, but it was external events. That's why the counter reaction probably could become stronger to compensate this previous news that has been released. And market right now, from technical point of view, stands in the strong support. So it's also agreement support, because ABCD target stands at the same level. As a result, take a look that on the hourly chart we've got double repo buy pattern. So we have thrust down, close above 3 by 3, close below, close above again. And we've got the double repo buy. The bottom of the double repo takes the shape of the butterfly. I hadn't drawn it here, but you could easily recognize it. So this could become minor left wing, right wing, and upward action. So the minimum target of the double repo, usually the 80% of the thrust, stands approximately 80 even area. So here is 80 even will be somewhere in this area. So maybe market could reach it. Why not? So that's approximately what we could expect during today's session. So as you can see, the market has reached a strong support and already has formed the bullish reversal pattern right around this area. It means that upper bounce could happen. Theoretically, following by the Napoli double repo framework, so it should reach the 50% of this whole thrust down. But anyway, some kind of the bounce should happen. And finally, this bounce we should not treat as the reestablishing of the direct upward action to the 81.65. As I said, as this drop was really fast, after the minor retracements probably really could happen, the market could show another leg down here still.